Yes, it has been a busy week of central bank action with the signs of divergence between Europe's central banks and the Fed. Sweden's Riksbank kicked off on Wednesday with a 25 basis point cut, signalling further easing this year amid slowing momentum in the Swedish economy. Later that day, as we got the Fed's decision to hold as expected, with the median projection from policymakers suggesting 2 cuts this year, even as an increasing number of officials signalled they expect to stay on hold for the rest of 2025. Chair Jerome Powell flagged risk to the outlook from President Trump's tariff policies.
What we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional forecaster with adequate resources and forecasts for a living is forecasting a pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months.
The SNB cut rates 25 basis points to 0 yesterday. That's right, ZERP, as safe haven demand for the Swiss franc has dampened inflation. SNB Chairman Martin Schlegel told CNBC the move isn't necessarily a step towards a return to negative rates.
Going negative, we would not take this decision lightly, because negative interest rates, they come with challenges and also with side effects for a lot of actors in the economy. So we are well aware of all these side effects and challenges. So we would not take this decision lightly, and the hurdle to go negative is certainly higher than just like a lower interest rate in the positive territory.
Yesterday also brought a surprise rate cut from Norges Bank, its first since 2020. The central bank said more cuts are likely this year, with its outlook suggesting softer inflation than previously expected. We also heard from the Bank of England policymakers voting 6-3 to keep rates on hold, citing global uncertainty but flagging weak growth figures and loosening in the labour market. Traders remain split on whether we will see a rate cut in the BOE's August meeting.